Welcome to NN Investment Partners MaxTen, a series of one-on-one interviews with our investment experts in less than 10 minutes. I'm Stephanie Broad, thank you for joining us. Today's guest is Shuke Chan, Lead Portfolio Manager for NN Investment Partners Patrimonial Balanced European Sustainable Strategy. Thank you for being here with us today, Shuke.
Hi Stephanie, thank you for inviting me.
Now we have quite a few questions for you, Shuke, so let's kick off and start our 10 minutes together now. Tell us about the Patrimonial Balanced European Sustainable Strategy. How does it differ from a normal mixed fund?
It's an all-in-one solution aimed at increasing the wealth of our investors in a responsible manner. Our fund was one of the first sustainable multi-asset funds to combine top-down asset allocation with a uniform sustainability approach across asset classes. The portfolio includes no corporate derivatives or fund-to-funds investments. This helps ensure that it contains no controversies.
And what value does the sustainability angle add for investors?
This is a straightforward multi-asset product that allows investors to put their capital to work in a sustainable manner. We invest only in sustainable companies and sovereigns. We actively engage with those companies to help them improve their ESG profile. Innovative and sustainable companies are becoming increasingly important in the current market conditions. This makes them attractive for investors, both in financial terms and in terms of sustainability. Our fund carries the Belgian Fabelfin and French ISR sustainability labels, which highlights its sustainability.
Can you elaborate a bit on the investment approach of the strategy?
We take a four-step approach. First, the benchmark. The fund has a balanced profile, which means it has a neutral strategic allocation of 50% equities and 50% fixed income, with a bandwidth of 10%. The next step is asset allocation. Our multi-asset team generates its investment views based on quantitative as well as qualitative analysis, which supports our top-down asset allocation and intra-asset class assessment. The third step is instrument selection, which consists of four building blocks: Euro Sustainable Treasury, Euro Sustainable Credit, Euro Green Bonds, and European Sustainable Equities. ESG analysis plays a crucial role in our bottom-up selection process. Exclusions as well as inclusions are important. We exclude some companies based on their activities or behavior. We include companies with positive ESG momentum. We believe this momentum helps foster positive change and leads to improved societal and financial returns. The fourth and final step is our daily risk assessment. If we are not happy with the outcome of this assessment, we look back to step one.
This fund focuses on the European market. Do you see any demand for a global focus?
Sustainability played a major role in the creation of the fund, particularly in the European markets. We now see responsible investing becoming increasingly important worldwide. The demand for a similar investment product with a global focus is therefore increasing. So I'm pleased to say that we are responding and that we are developing a new global fund.
2020 was an unprecedented but strong year for us. How do you expect this to play out in the years to come?
2020 was unprecedented indeed. Since the outbreak of COVID-19, we have seen central banks and governments in stimulus mode. In financial markets, we have seen interest rates move down, and risky assets making a strong recovery since the second quarter of 2020. The sustainable names in portfolio have done very well in that environment. The performance of these early COVID winners has contributed to a fantastic performance for last year. Looking ahead, interest rates, positive ESG momentum and risk management will play a key role beyond the recovery. On the back of economic data picking up, interest rates are moving up. Managing risk is essential for laggards to catch up in the short term. In the longer term, we remain convinced the philosophy to focus on the positive ESG momentum. Overall, asset allocation with sustainable security selection provides us with a strong combination going forward.
Great. Now, recently the Patrimonial Balance European Sustainable Fund received a Morningstar Award for the best Euro allocation fund in Belgium. What does this mean for you and your team, and what was the key to this success?
Yeah, well, we are very proud. It's a great achievement. We were selected from a large category with about 1,000 share classes, including both sustainable as well as traditional funds. The award acknowledges the fund's long-term performance as well as its performance for the year. We cannot rest on our laurels, though. Awards are based on past achievements. We are working very hard to make sure we can continue to learn and keep doing well.
And speaking of continuous learning, you've been in the firm quite some time now. So what has that journey looked like?
Yeah, it's been quite a journey. I started in 2007 with 4 colleagues. We managed one fund, 147 million euros to start with. These days we have grown to a large team of 27 full-time professionals. We manage over 100 different portfolios, and in terms of assets we manage over 30 billion euros in assets. So it's been quite a journey, and it's definitely very encouraging to see that sustainability plays an increasingly large role in our world as well.
Well, it's almost time to wrap up, so very briefly, what points should we remember about this fund?
3 takeaways. 1, it's an all-in-one solution and a simple product to enter. 2, the strategy offers a combination of financial and sustainable performance. And last, it uses a disciplined multi-asset process and approach.
A clear and concise story. And our 10 minutes stop now. Thank you, Shuki, for this insightful Q&A.
Thank you, Stephanie.
And thanks to you for watching. I hope it was as insightful for you as it was for me, and that we see you again at NNIP's MaxTen. Stay tuned.